And the Central Bank of Nigeria cashless policy has received a boost as the total value of transactions through various electronic payments channels stood at a total of 424.3 trillion naira in the first 9 months of 2019. This represented 83.5% increase compared with a total of 231.2 trillion naira recorded at the end of June 2019. Now, the figures were contained in the latest industry e-payment data as the end of September obtained from the CBN. Still in the region, the Central Bank of Nigeria will increase bank loans deposit ratio, that's the LDR, rather to 70% by 2020. Recall that the Apex Bank in May introduced a 60% LDR for banks. The LDR was increased to 65% in September, December 31st, 2019, as the deadline for compliance. Meanwhile, the Apex Bank expects Nigeria to achieve a 2.38% GDP growth rate in the fourth quarter of this year. Now, the GDP growth target will be an improvement over the third quarter growth rate of 2.28%. The Rise business analyst Chika Mbonu joins me in the studio for more on this. Good to have you, Chika. Good morning.
Morning, Lee. How are you?
Fine. So let's look at the LDR scenario from 60% to 65% by December 31st, 2019, and now 70% in 2020. Now, the CBN is really milking this policy, don't you think?
It's become a road well traveled by the Central Bank of Nigeria.
Okay.
And this is one of their anchor policies for 2019.
Okay.
One of the success stories they are pushing out there of their major achievements for 2019. Having released at least more than 1 trillion of new loans into the, for their customers, into the economy. Now, of course, we know already that there's a correlation between the growth in the economy and the amount of credit that's in the economy. You see the CBN, one of the major issues in the economy now is lack of growth.
Yeah.
And we are having a negative per capita income that is, falling because our population rate is growing more than our GDP is growing. And so CBN major, objective is to grow our GDP, expand the economy. And one of the areas that they know is pushing out credit into the economy to enable the economy grow. That's why they have large on this policy and then hitting on it. They made a success out of the 60%. The 65% is going to expire by December 31st. And that's why, it's sweet for them. So that's why they're just, even though we're not finished the 65% deadline, they are still looking at, they're already looking at 2020 and saying they're going to push it to 70%. Still below the sub-Saharan African average for compared to what's happening in Nigeria. Our ratios is still very low, even at 70%.
A lot more still needs to be done, no doubt. So what are the possible consequences of these policies to the economy as a whole?
Of course, the positive side for us immediately is that if you look at the economy, look at the businesses, one of the limiting factors to growth has been lack of credit. So this now will be available to the customers and the companies to be able to grow their business, starting from the SMEs to the large corporates. They'll have more money to grow the economy. Of course, coming from there will also be employment and growth in our GDP. But as it may, where we're enjoying that advantage, let's not take our eye away from the fact that, naturally, the environment, the macro environment we operate in is still very hostile to lending.
Yeah.
There are a couple of limiting factors to growth. And as you're forcing banks in to lend, we need to keep an eye on non-performing loans. CBN is also celebrating that it's about 6.6 or 6.5 now.
All right.
Let's not, by pushing out these loans more, that we aggravate the NPA ratio to get worse. Now, the thing about banking is that it's not when you give the loan that you will see the non-performing loans.
Yeah.
There's a lag time. It takes about 18 to 24 months for things to start going bad. So even though CBN is celebrating the NPA ratio now, it's down the line they're going to know whether things are going to bad. So that's them. Keep an eye on issues that will create bad loans while we're growing these loan portfolios.
Very good. And wrapping up the LDR issue, how do you think banks will respond to this?
Yeah, they have responded well. Most importantly, the lower segment of the business, especially the retail segment. A lot of individuals now that couldn't access any bank credit before are sensing that down, just on their phones, which has been happening in some countries outside here. So for us, that's major. The expansion in retail credit. That's one of the major major developments in 2019 in the banking industry. That retail credit now has been pushed by a lot of banks, which before now used to say it's not possible, but it's happening. So banks are going to grow their credit on that line, concurrently reinforcing their risk management processes to make sure that the NPLs don't get worse than they are now.
Indeed, very good. Now, let's take a look at the payment reports. Interesting, a significant growth, no doubt. So what could have accounted for this?
Cash is king, you know, cash is king.
You can say that again.
Cash is king, you know, and the power of, it just the report tells you about the power, the amount of cash still outside the banking system is large. You know, with the CBN forcing people now to bring the cash into the system, you can see the salutary impact is hard on the ratios, alternative channels. So it's not surprising that this is happening. It's basically on the fact that CBN is forcing banks to, you know, push companies to put all their money into the trade banking system and penalizing those who are having large cash holdings. And so people are now forced to use alternative channels. This even tells you that amount of cash still outside the banking system. You know, but we should look at the other things that happen. That the CBN, on one hand, should not be promoting this, and on the other hand, chasing people away from this.
True.
But we shouldn't forget from where we're coming, where we're coming from. There used to be times that every day we used to hear about luxury buses coming from the east, and armed robbers attack them and steal millions of naira. Because that's how the traders used to carry their money to come and shop in Lagos. All those now are gone, you know, because the paperless money, electronic money,
times have changed.
Yeah, times have changed. You know, that was the story of the armed robbers that were caught entering into a vault, and I was telling you, you guys are very brazen. Why are you coming here? They said they don't see cash again on the streets. You know, so we need to recognize that this has had a very good impact in the economy, but there's still a lot of cash there. You know, so it's in response to the CBN policies. That's why this is happening.
Now, despite these gains, still not a smooth scenario. What have been the challenges facing the customers using these payment options?
This ride on the back of the infrastructure deficits we have in the economy. I mean, there was a time that one weekend, when yesterday I leave, there were about 5 banks, ATMs, close to where I live. One particular day, I drove for the 5 ATMs, there was no money. And it's all the issues, network failure. So that's a major limiting factor to the growth of the electronic channels, the infrastructure deficit that we have. You don't have power to power their POS. You want to make payment, they tell you, oh, sir, there's an ATM somewhere, go and withdraw cash and come and pay us. Meanwhile, you know, so it's still resting on the fact that we have infrastructure deficits. The POS and the ATMs use SIM cards. You remember the amount of drop calls that you have. It's even better in Lagos. As you step out of Lagos to the other areas in Nigeria, it gets worse. You know, it gets worse. The downtime is higher. So it's the same thing, the weakness of the infrastructure systems we have in Nigeria, which is supporting the electronic payment platforms. It's the major limiting factor,
Very good, Chika. I'd like to thank you very much for that. Chika Mbonu, always a pleasure to have you.
Thank you, sir.